Welcome back, financial investors. My name is Brent, and today we're going to be doing our Stock Market Monday buys video where we go over stock futures. Currently looking negative right now going into Monday, meaning a good buying opportunity for me. Also, we're going to jump over into the M1 Finance Roth IRA. Take a look at the performance for last week, the overall performance as far as the portfolio changes for the week. Also, look at what stocks were up, what stocks were down, and then look at the activity. What stock did we buy, and also what dividends did we receive? We did receive over $20 in dividends this last week alone, which is a very nice payout. So we'll go over what stocks paid out and how much they paid out. And then we're going to go ahead and make our Monday buy. I do believe I only have one stock I'm planning on buying today, but we're going to look at what stocks are coming up on ex-dividend and what stocks are currently down in the portfolio, because I know a lot of them were down in the past, but they've recently hit some new all-time highs, or a lot of stocks are back in the green. So we're going to cover that here in today's video. With that said, if you have not yet subscribed, hit that subscribe button below, right below this video. Also hit the thumbs up if you do enjoy this video, and leave me a comment if you have any comments or questions going over the stock market, dividends, or real estate, or something here related to this video. So let's go ahead and get into the video. So after hours right now, we are looking negative. Now the China market is currently open. They are down a little over 1% right now, down 1.08. England also open, down 0.33. Germany down 0.57. So it looks like stock futures on our side, S&P down almost 0.5, NASDAQ 0.75, Dow 0.5. So I do believe Monday is looking to be a bit of a red day, and that's completely fine. We just closed with some all-time highs here on Thursday, breaking to some new ones. So if we have some bit of a pullback here, that is completely fine. We also have the Fed coming out this week. Lowering interest rates is possibly what is going to be going on. If they don't, that's going to definitely hit the market, because that's just been priced in, and that is why we are trading so high, because a lot of investors already believe that the Fed will cut rates, and then we'll do another rate cut here towards December. Jumping over into the M1 Finance account, taking a look here at the main screen, we can see that the account here has $22.51 here sitting in cash. So in 1 week, this account made $22.51. So we are getting to a nice point now, a year and a half later since we started this account, where this is starting to produce a very nice amount. You know, 22 bucks, if you were to spend that over the course of 5 days, that's $4 a day. Some people would say they could live off that, buy a cheeseburger every meal. You know, it's not healthy, but you know, you can see the progression. And this is a account that's only a year and a half. So what is it in the next 5, 10, 15, 20, some of the years? We're in our, my wife's not 30 yet, I'm 34. So we have quite a while, even until we hit that retirement age where this would be tax-free, and then this account still from that point, well, we're not going to be withdrawing much of the cash. We'll still be collecting the dividends and living off the equity or dividend payout. So this still has a very long history into the future as far as where it'll end up at. Now, overall, since this account was created back on January 8th, 2018, this account's up 19.38%. We've had a market gain now of $1,194.13. Of course, this is going to go down here on Monday. Market gains fluctuates up and down. That's not as important. As long as I kind of keep up with the S&P overall performance, the main thing here that this portfolio here that I've designed is dividend driven. So over the course that this account has been created and continued to be invested in, it has earned $572.85. And many of these companies over the course of the last year and a half have all increased their dividend by a good amount. Now, equity wise, we've broken to some new all-time highs here recently. We did hit some all-time highs here on September 11th. That was last Wednesday, and then we kind of trended back from them, and we are now sitting here just a little bit below that all-time highs point, but still really good overall. You can see our 1 week performance is up 2.13. A lot of equity here made just in the last week, $342.09. We earned, meaning that we sat through a few stocks that are going ex-dividend last week. So that earned us $14.16, which has not been paid out into the account yet. Now, as far as some of our best performers last week, we had CenturyLink up 7.85. This one is in the green now, and I will more than likely sell this position here now that it's not a prime one here that I wanted in the account. It's one that I purchased down at $11.99. When it dropped down into the $8-9 point, I felt I really wanted to kind of buy a little bit more. CenturyLink is a tier 1 provider, meaning that they provide level 1 support or 24-hour support to businesses and etc. And overall, we as a business, our business where I work at is using multiple vendors, say CenturyLink and Spectrum, in order to get redundancy between network connection. So if one connection fails, we can fail over to the other one. CenturyLink's one of those we're considering, and I know a lot of other businesses use them as sort of a backbone and secondary provider. But I will probably end up dropping them out of the accounts here now that they've kind of hit some new all-time highs. They're up 14.59%. They recently paid out a dividend, which we will see. And actually, we can go ahead and sell this one right now. I'm actually just going to go ahead and not do it here because that is not what we want to do. Actually, we'll wait till the very end and I'll get rid of it. Now, a couple other positions that are also positive for the 1 week. Oops, I went back into here. Let's go ahead. We're back on the main screen. AbbVie also picking up nicely. Now, AbbVie has not been picking up, performing as well as some of these other ones, but there we go. It is up 5.71% in a week. Las Vegas Sands right behind it, 5.23. Caterpillar and 3M, you'll notice that these two industrial companies that have been kind of getting hammered due to the trade war, these past 2 weeks, we've had a lot of issues as far as trade war kind of easing off, and Caterpillar and 3M are taking advantage of it and moving forward. Eaton Vance, JP Morgan, those financials moving up nicely. We can see overall for the week, we had a few positions that were negative. Our worst position, WP Carey, which had just hit 52-week highs last week. So this down 3.35% is nothing at all. This is just a small backstep for them, and this has been a really well performing REIT. General Mills has also done really well. Altria, of course, always in the news for Juul, and now there's been a couple deaths because of it, so that's unfortunate. And it's not really Altria's fault overall because they don't supply those flavored cartridges. They supply their tobacco products, and it's the third-party vendors who are making these kind of stand out for the younger crowd, and that's why they're getting into it. I was reading about one woman who smoked it just because of the mango flavoring, and that was the only reason. So things are terrible. Simon Property Group, Digital Realty Trust, Kellogg's, Lowe's, Essex Property Trust, Kimberly-Clark, and Consolidated Edison, all down there for the week. But overall, that's fine. A lot of these are actually up positive overall in the portfolio. If we look at the overall performance of these positions, we can see WP Carey is at the top, along with General Mills and a few others behind it. Our worst performing companies right now are Altria, down 32.92%. That's fine. We can always average into this one, although it is at a point right now where I'm not going to be adding to it right now. AbbVie, down 20.33. 3M, this one was much worse. Caterpillar and 3M were down some 20 through 30%, so they've recovered nicely here. We already saw 3M and Caterpillar recovering just this week alone, so that'll be fine. Johnson & Johnson and Simon Property Group also there. So kind of an interesting mixture. We can see a lot of green now in the portfolio. So overall, we only have 6 positions that are red out of the 30 some, I believe 32 or 33 stocks, stocks here in the count. So activity wise, what stocks paid out dividends that we have $22.51 sitting in cash? Well, here we made our buy here on Monday. We added our equity here of 115.38. We made a single buy towards Las Vegas Sands, but we already saw there in the chart, Las Vegas Sands, I believe it's actually positive now, and I'm going to go ahead sort this by green. So we're going to go down here towards the bottom. Las Vegas Sands, ticker symbol LVS, is now positive in the portfolio, up 4.02. So normally I like to average down on positions that are red. In this case, Las Vegas Sands is one that I wanted to average down into because it is coming up on ex-dividend. And I just recently bought it last week because it is going on an ex-dividend. It was down 6%, 4% when I was buying it. Now it's positive 4%. So big swings there. And that is why you got to average down when you get the opportunity to average down, because those positions that you feel will benefit here in the future from or getting hammered due to the complications of the trade war, eventually when that is all resolved it'll all recover and kind of make it all back. And the company itself was really strong. So CVX paid out $1.33. Johnson & Johnson paid out $5.16. 3M paid out $5.50. Walgreens paid out $4.73. CenturyLink there, I had those few shares, paid out $1.03. And Kellogg's paid out $4.76. So CenturyLink, I only had about $60, $70 in that position, but it paid out $1 there, which is a very nice yield right now. So all of these together, that paid out $22.51. So I will be putting another deposit of $115.38 plus my equity there of $22.51. So we will have about $145 and some change there, about $147 I believe, in order to invest in this week. Now jumping back over into this spreadsheet here, this is going to show me, oh, it doesn't load right now. It looks like it's all trying to load up some information there on the bottom. So I don't know if I'll be able to pull some of these companies that are going ex-dividend. No, it's not going to pull right now. So what we can do here manually is I can go ahead and pull these up on the other page. And of these positions, I'm kind of wondering if any of these are going ex-dividend here in the near future. And if they are, because they are actually down in the portfolio, it may make sense just to kind of average down on these. So first one here that is negative is Pfizer. Pfizer, if we kind of scroll down here towards the bottom, it just went ex-dividend here on August 1st. It won't go ex-dividend again until November time period. So Pfizer's kind of out of the picture at the moment. We'll take a look here. Next one is Johnson & Johnson. I know Johnson & Johnson also went ex-dividend here recently back on August 26th. So again, they will not go ex-dividend again until November 27th, around there. Simon Property Group, currently negative in the portfolio. If we take a look at them, they've also gone ex-dividend recently in August, won't go ex-dividend again until November. 3M, scrolling down here, again, another August. Let's go ahead and go to Caterpillar. Scroll down here, and they went ex-dividend back in July. They will go ex-dividend in October. October is still a bit away, but we'll go ahead and move them to the front here. Next, we have AbbVie. There we go, October 11th. That's still quite a ways away, not as far away as some of the other ones here. So here's the ex-dividend date, October 11th, followed right behind by October 20th for Caterpillar. And then our very last one in the negative right now is Altria. And Altria will be going ex-dividend here on the 13th, and that was Friday. So September 13th, which was just this past Friday, it went ex-dividend. So I don't actually have any stocks right now that are negative in the portfolio that are coming up ex-dividend in September. Now, I had planned to buy Las Vegas Sands once again. These position things are not showing up right now, but this one is going ex-dividend here in the next week or so, I believe. Yeah, it's going ex-dividend here on the 17th. The 17th is Tuesday. So my plan was last week by Monday, I was expecting it to be negative going into this week in the portfolio still, but we saw it's up 4%. I don't really want to average up right now. I do believe it'll pull back here in the future. It's in that resorts and casinos area. So I will probably kind of wait on this one. Let's get rid of my Discord here. And so right now, that leaves AbbVie and Caterpillar to kind of average down on. Now, AbbVie, I have $751 averaged into that one currently. I have a share price of $88.36. And then we have Caterpillar. Taking a look here at Caterpillar. Caterpillar's at $734, down a little bit less at 8.37. Feel a bit more comfortable right now adding into Caterpillar. I do have about I believe like maybe $4,000 worth of Altria over on my Merrill Edge account, and that was actually positive right now. I believe maybe 4-6%, 4-6%. So this right here, my actual share price of Altria is down in the $66, $64 range right now. And then averages right in the $67, $68 range. So I know overall we're pretty positive, so I don't want to be buying up much more Altria. So what I'm going to do is, I guess I don't have too much to average down on besides Pfizer here. Pfizer, I've only added $424.18 of equity into it. It doesn't go ex-dividend here again until November, but I'm not sure when. Monday is going to be negative, so Pfizer should be pulling back here a little bit more. I think I will be splitting up my positions here between Caterpillar and Pfizer. So nothing really crazy going ex-dividend here in the near future. So now instead of having to be able to kind of add into those, I'm going to have to split it here. So jumping back over into M1, we have 115.38 plus $22.51. That gives us 137.89 divided by 2. So we're going to add about $75 into each. So I'm going to go back into my portfolio, scroll on down to, I'm going to sort these by my negatives here, negatives at the top. We're going to find Caterpillar and go ahead and buy into Caterpillar. We're going to go ahead and, what was the price I was going to put in there? Maybe 75, I believe is what I had said. So we're going to go ahead and put in 75 and confirm and go back into the portfolio, and we should be able to see Pfizer right here. Now Pfizer is showing up 6.71, and that is because it is money weighted, and M1 Finance throws my earned dividends towards the total returns of this portfolio. But here we can see market gains. We are down 0.64, and that is right here, down Pfizer, down 0.64, and that's about a difference of negative 0.15. So we're basically locking in, our dollar price that we bought at $36.97. It's currently trading at $36.91. We're getting a starting yield of the same where we started before, 3.9. So really, it's as if I bought the stock back in January 2018 is when I bought this one the last time. So I'm going to go ahead and purchase Pfizer and make another $75 purchase here and continue and confirm. And really, I haven't bought Pfizer. Here, I'll show you. Pfizer. I haven't been able to buy Pfizer for a while here. We can see here, I initially purchased Pfizer back when I started this portfolio back in January for $385. That was my starting position. And then it wasn't until November when the market started kind of coming down really hard where I was able to buy more of it. And here I bought 865 and 3053. And then I kind of had to ease off of it because Pfizer had popped back into the positive. And here we can see the dividends slightly growing here. Now 385 was our initial investment, and those shares paid out 360. I bought a couple more shares there, plus they increased their dividend. So we went from 366 to 413. So here we're going to be buying up some more shares. Our next ex-dividend payout is going to be larger than 413, which is nice. And that is basically all I wanted to cover in today's video. So overall, negative day on Monday. We have two stocks we are going to be purchasing. We are going to be purchasing Pfizer, which is down very slightly, and Caterpillar, which is down around 8.3%. This will kind of lower my unit cost just a little bit, plus it'll increase my equity a little bit in the position and lower my unit cost, increase my yield on cost, increase some of my dividends here going forward. Now, Caterpillar doesn't have a huge yield. 3% is not bad. From 2.83, I'll be averaging up closer to that point there. So that is it for today's video. Again, if you guys have enjoyed this video, hit the thumbs up button below. It really does help the channel, does help the algorithm with this video. If you have not yet subscribed to the channel, I would highly appreciate it if you do hit that subscribe button below. And of course, if you have any comments or questions going over this video, the stock market, dividends, drop it into the comment section. I do really appreciate all the feedback, the comments. I like to interact and talk back and forth if you have any questions. So drop anything at all, and I will see you guys next time. Have a great day. Bye.